The year is 2026, and in the bustling city of Miri, Sarawak, the air hums with the sound of ongoing construction. New residential towers, commercial hubs, and luxury condos stretch towards the sky, reshaping the city's familiar skyline. The question on every potential investor's mind echoes through coffee shops and online forums alike. Is property still a good investment in Miri? Miri has long been recognized as the oil capital of Sarawak, and the city's fortunes have traditionally been tied to the ebbs and flows of the petroleum industry. However, in recent years, Miri has embarked on a journey toward economic diversification. Its once singular dependence on oil and gas has gradually shifted as tourism, education, and small businesses grow in prominence. This subtle transformation has influenced the local property market, spurring both optimism and caution among investors. Walking through the city center, one notices a different energy. Where old shophouses once stood in quiet resignation, trendy cafes now buzz with university students and young professionals, attracted by recent educational institutions established in the city. The influx of younger population segments has fueled demand for rental properties and affordable apartments. Yet, in the suburbs, some older housing estates show signs of stagnation. For sale signs linger longer than they used to as buyers become more selective and price-conscious. Data from local real estate agents reveal a nuanced story. Prime residential property prices have seen modest appreciation since 2024, hovering at about 3 to 5% annual growth, while some high-tier segments face oversupply due to ambitious developments. Commercial property remains hot near shopping districts and tourist attractions, but secondary markets and remote suburbs move sluggishly, with rental yields softening in less central areas. For the savvy investor, 2026 presents both opportunities and challenges. Strategic purchases in established neighborhoods or in areas adjacent to the expanding universities have proven resilient. Properties catering to the rental market, especially for students and visiting professionals, continue to enjoy steady demand. Moreover, as Sarawak pushes green energy initiatives and ecotourism, properties near new infrastructure projects or natural attractions hold promise for capital appreciation. However, not all that glitters is gold. Speculation-driven booms have cooled, and buyers are urged to be cautious of vacant units in luxury high-rises developed ahead of actual demand. Regulatory measures have also become stricter, with new guidelines on foreign ownership and short-term rentals impacting quick-flip models. Rising construction costs and a potential oversupply in certain districts add to the risks. Seasoned investor Chong Wei, who has seen several property cycles in Miri, shares his perspective. The market remains healthy if you know where to look. It's not the Wild West it was a decade ago. Now, the best approach is calculated patience. He emphasizes researching upcoming infrastructure projects, understanding the area's demographic shifts, and focusing on tenant needs rather than speculative appreciation. Ultimately, in 2026, property in Miri can still be a good investment, but the days of easy profits are gone. Success is increasingly determined by diligent homework, selecting the right segment, and a long-term outlook. For those willing to adapt strategies and stay informed about local regulations and development trends, Miri's evolving property market continues to offer solid, if measured, rewards.